So I just made a video about AT&T and why it wasn't a big deal that AT&T has not increased its dividend for 6 quarters. And now AT&T just released the news that they are selling off their Time Warner segment to Discovery and getting out of the whole content channel business. So that's kind of why they haven't, or it's probably why they haven't increased their dividend in 6 quarters, but we didn't know that at the time. The news came out that AT&T's selling off their Time Warner, which is their HBO Max and all their movies and all their streaming services and all that, and they're spinning that off and they're going to merge it with Discovery. Now, Wall Street Journal calls this the biggest about-face in corporate merger history, which I thought that was kind of funny. And it follows a history that AT&T and Time Warner have had with bad acquisitions. Long time ago, Time Warner tried to buy AOL. They did buy AOL, and they eventually had to sell that off for a big loss. AT&T bought DirecTV at the top of the cable business, and they've been losing customers on that ever since, and they just announced that they're finally getting rid of a big piece of DirecTV. And then they spent a whole bunch of money and a legal battle to buy Time Warner, and that was only 3 years ago. Now they have to sell that off because they want to focus on their core business. Now, this does make a lot of sense for a company like AT&T to merge off part of their business, since you have the telecommunications segment, and that's where they get most of their money, and you have the content and the media side of their business, and they're not really related. AT&T will be able to compete with Verizon more, and Verizon does not have any media segments. They don't create content. And then Netflix and Disney, they don't have, telecommunications. They don't have cell phones plans, and they don't have internet provider services or none of that. So they're really different. And this is exactly the time that you'd want to see a company do a spin-off. And it's really easy to see that. And it makes a lot of sense that they're doing this. But there was the surprise, because this is still a new thing. They merged with Time Warner just recently, only a couple years ago, and now they're already spinning it off. So it is a surprise to a lot of investors. This new company will be some sort of merged version of Time Warner and Discovery. And we all know Time Warner has like the HBO stuff and ESPN and all that. And Discovery has the Discovery Channel and Home Garden Network, and I don't know what else, and I don't know who watches Discovery Channel or this network. But it's supposed to bring in a lot of money, like $50 billion a year in revenue. And in exchange, AT&T is gonna lose a bunch of debt. They're gonna reduce their net debt load by 30%, and that's really good for AT&T. But Discovery, this new company, is gonna have about $50 billion in debt. I think the number is $55 billion in debt, and that's still a lot. So this new company is, AT&T is kind of pawning off a bunch of debt onto this new company. But it could be a big success with content, streaming wars and stuff, and having so much content. But we don't know how this new company is going to be able to merge these, because Discovery has its own service now and HBO Max has its own service. Are they going to remain two separate services, or are they going to just merge this all into one big thing that subscribers are just going to have one login to watch all this different content? We don't know any of that yet. And they plan on doing a lot of expanding and investing into new content. So there's going to be a lot of capital expenditures. And we don't know anything about a dividend yet, but it's likely that this company won't pay a dividend. just because there's going to be so much investing into the company and content and a big chunk of debt. Now, a lot of people invest in AT&T because it has a high yield of like 6.4%. That's why, it's a really popular stock, and it's the highest yielding dividend aristocrat. But at the cost of spinning off Time Warner, they're gonna have to cut that dividend. They're gonna cut that dividend by 50%. And that's got a lot of investors upset, and that's why people are selling this off. On the news, both companies had a little bounce, but then by the end of the day, both companies' share price was negative for the day. Even though there's a big dividend cut, 50%, AT&T still has a really high yield. And after this dividend cut, it should still have a yield of above 3%. 50% of 6.4% is 3.2%. That's still a respectable yield. And the dividend payout ratio for AT&T is supposed to be down. They want to keep it around 43% or so. And that's much more healthy than the 65% payout ratio that AT&T has now. After the dividend cut, though, it's not necessary that you have to sell these shares if you care about the dividend, because this above 3% yield, it's still, if you compared it to the dividend aristocrats, that yield is still higher than 2/3 of the dividend aristocrats. It won't technically be a dividend aristocrat, but it's going to have a healthy dividend still. Then after the spinoff, investors should receive shares in this new company. AT&T investors will have, I think it's 71% of this new company, while Discovery shareholders, they will own 29% of this new company. Besides that, we don't know a lot about this new company. We know that's going to have a bunch of debt and it's going to have all this content. We don't exactly know the plan, like if you're going to have one login or there's going to be, different segments that you log into or different plans or anything like that. Probably it will not have a dividend. That's probably safe to say. And AT&T's dividend is going to be cut. But this new company, it may be a success, and we may want to keep it if you're already a AT&T shareholder. It may be a big success and be really profitable. We don't know anything about it yet. And if you were investing in AT&T for the income, maybe you don't need the income for, the next 10 years or so. And you may want to just keep reinvesting the dividends for a while and see how this all turns out. But if you need the income now, and you're closer to retirement and you count on that 6% yield, maybe you want to sell off the shares. I don't know though. That's what we know about this deal, and it's a pretty big deal. It's kind of funny because I just made the video, put a little link to that somewhere. I just made this video, just recently, and now the whole thing gets tossed on its head. Go ahead and leave a comment down below if you're going to sell your shares of AT&T, or you're going to hold out and see what this new company has to provide us. If you learned anything, really appreciate a thumbs up, subscribe to the channel if you haven't, and then I want you to go have a good day, alright? Justin out.